Today is February 16th, 2026, and SQQQ has spent more than 8 months bleeding inside of a controlled downtrend price resistance level, and it is now pressing into the exact zone where breakdowns either fail or short squeezes begin to erupt. And this is whether this is the exact major key inflection point where tech complacency could have just peaked. And for months on end, SQQQ has respected this clean downtrend with lower highs and lower lows, and every rally was sold. But something here has completely changed. The short-term moving average was reclaimed off this 50-day teal moving average and pushed back up against the 72 handle price resistance supply shelf, and momentum is no longer compressing. It is beginning to expand, and this is the first legitimate upside impulse in months on a complete back double triple day back test, clearly defending the 6750 handle and in confluence of its 50. And I believe this will be the level that matters now. It was its former breakdown supply, and it aligns with beautiful volume profile resistance, and it is the real seller checkpoint. Break it on a validated daily candle close above, and short volume traders start getting uncomfortable. Reject here and the downtrend could completely resume cleanly, so this is the ultimate decision zone. Short sellers, bear traders, they want a solidified green breakout candle close. You had a huge volume ramp up here in the last couple of months. RSI is beginning to push amongst the 60 handle here, where the MACD has crossed bullishly up above. You have a nice clean divergent low with positive and bullish divergences continuing to expand to the upside, with your price per center oscillators expanding on the upside candles above its zero line threshold. And that is not just a passive drift, this is full-blown participation. And the 200-day moving average is still declining up overhead here. So this is within the beginning stages, not confirmed, but still something to absolutely respect. You get the daily close above, I believe, call it the 73.50 handle, hold it, and your targets to $78 to the $78 handle increase dramatically for 6.5% in gains, up to the 85 handle T2 for 16% in gains, and then ultimately the 95 handle overcutting its 200-day moving average if QQQ and tech cracks hard, setting some stops down below for the risk reward ratio down below the 60-50 handle, ultimately undercutting back into the downtrend price resistance level. But make no mistake about it, this is a downtrend and clear defense by the bears here in a first serious type of rally. And this is where you potentially begin to react. If and when SQQQ clears the $78 handle on a validated close, it'll be because liquidity is beginning to tighten and credit spreads are beginning to pound the drum that the tech beta is rolling over. Inverse ETFs usually don't bottom quickly. They bottom when, again, the complacency in tech peaks. And in that moment, it is always invisible until it isn't. And I believe if the $78 handle breaks, volatility won't just come back gently. It'll come back racing fast. And in correlation of the US Tech 100 space here, cash, futures, you have a validated nice clean trading range where every single motion has been consolidating like a kettle pot throughout this span of time. And ultimately, you break the $78 handle, you will have more than likely a solidified candle close breakdown, additional secondary sell signal. You had your first sell signal here with the back test. You back tested the primary uptrend price support level, and then you ultimately broke down for a secondary sell signal. The third and long breakdown sell signal would only solidify and have heavy confluence with SQQQ and the $78 handle, and I believe that's where the real selling will ultimately begin to unravel. And then we'll get a harsh, full-blown rush towards the emergency exits.